Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 22nd of September, and we had an ugly week for the markets, losing anywhere from really 3 to 5.5%. Those semiconductors down 3%, now losing close to 10% for the month. And the biotechs are still the worst, down 5.5% this week, adding to a already losing year. And the financials flipped to negative too. So let's take a look at these charts and make some sense of it. Here's the S&P 500 on the left with the SPY. On the right is the 30-minute time frame. That blue line is the week-to-date anchored volume-weighted average price. And we have what's most important here really is this 5-day moving average. I did a special video about it. I mentioned it in last week's video that from this failed move we should expect a fast move in the opposite direction. We kind of hung out a little bit before the Fed, and then after the Fed announced, that's when things really sold off and continue to do so. Here closing pretty much right at the lows for the week. Now when we look at the daily time frame, we are below a declining 20 and a declining 50-day moving average. This is where we were 50 days ago, this line right here. So next week we'll definitely have a declining 50-day moving average, and for the next couple weeks, unless we somehow make an amazing miraculous recovery and head up towards 450. I don't think that's reasonable to look for that. We broke down below the anchored volume weighted average price from this low that we had previously been looking at as a potential level where it might sell off to, and that's why I always called them a level of interest, not a place to do business, because when you see what happened there at that point, there was zero evidence the buyers were gaining control, and we continued to make a beautiful pattern of lower highs and lower lows. So as I always say, don't buy the dip, wait for strength after. Who knows, this market could go down to the anchored VWAP from the March low. That would put it down here at about, what is that level? Let's take a look together. And that level, hold on, would be about 426. Below that, we have a bigger, more important level. I don't think it'll be hit on this particular downward move, but you have this prior band of resistance, which is also the location of that blue, thick blue, year-to-date anchored volume-weighted average price and the 200-day moving average. So longer term, if we continue to sell off, I think that's a highly likely place that this market will come down to, and that doesn't mean it's going to be its final resting stop if it gets there. Let's continue to take it one piece at a time, and the most important thing again is we're below a declining 5-day moving average. If you want to day trade these rallies, that's great, but I would suggest all rallies should be considered guilty until proven innocent. I had some people telling me, hey, the market was back on Wednesday because of that rally, but we were still below the declining 5-day moving average, and this is more likely to occur than a rally with a declining 5-day moving average, in particular when we have a declining 20 and 50-day moving average. Nasdaq, pretty much the same story. We continued to stay below that 5-day moving average and make a pattern of lower highs and lower lows. So as long as that 5-day moving average is declining, it's guilty till proven innocent. We now have a declining 20 and 50-day moving average as well. The buyers showed up so far at the anchored volume weighted average price from that April low. That's where they showed up previously, and this time, who knows if it's going to hold. There's no evidence of it so far. Right now, what we see on these shorter term time frames over here on the 30-minute is we closed right near the lows in this market as well. So what we need to do is then take another anchor from the prior low and say, here's a potential level that this market might come down to. It's a level of interest. Nothing says it has to go there. The preferred scenario would be in all these markets would be a little rally up, then get people excited to close that gap, and then come down and start to make lower lows. But right now, going into next week, it's still, I would say, just very cautious. The Russell 2000, as we know, started out the year strong out of the gate. We ran up to that same level and found supply just under that 200 level again a couple weeks ago. We had this little rally which failed quickly, and we also broke below the 200-day moving average. If you look at the slope of that, now we have a declining 200-day moving average as well. This group is just garbage. Stay away from the Russell 2000. There's no such thing as down too much if the sellers keep showing up. Here we have an anchored volume weighted average price from last year's low, and that's not holding. If we take a look at a weekly time frame and go back to I was experimenting with some of these just to kind of get a handle. I mean, we've got this anchored VWAP from the 16 low, which is down here near 160. I'm not expecting that to happen, but I certainly would not be surprised. The path of least resistance is lower. If you're buying in here, you must like to lose money. Wait for the buyers to regain control and then manage risk in case it doesn't follow through. Semiconductors, as we know, has been our focus as far as if this group lost ground, it would lead the rest of the market lower, and that's exactly what happened. So we were talking about the double-headed head and shoulders pattern right here, and if we take a look at that and just conservatively say that this is the height of the pattern, we could call that the the neckline, the midpoint. Let's call it 146 up to 161. That's 15 points. Subtract 15 points from 147, and that gets us down to a price objective of 135. Well, look what we have there. We also have the year-to-date anchored VWAP, and that 200-day moving average, which is rising, will come up and meet that here in the next week or two. Now, we are holding on the anchored volume weighted average price from the March low in here as well. But we will look at the shorter term time frame. We look at that and say, do we want to be a buyer here? No, not with a declining 5-day moving average. Even over here, we were looking at the possibility that it could turn like this, but it never did do that. Instead, it continued lower, and that's why you don't buy as you're waiting for it to rally. You want to buy strength and then set your stop underneath the most recent relevant higher low. That's what this would have looked like if it broke here, to buy above that level with a stop here. Take some off on a little bit of a rally, raise your stop under there. That's the way you want to do it when the bull market is here. Right now, we just lost 10% in the last 3 weeks. I don't know what your time frame is, but this is a bearish trend right now. Are we in a bear market? I don't like those labels. Realistically, above a rising 200-day moving average, probably not, but we're certainly in a bearish environment, and it's easier for semiconductor stocks and most stocks in general to go down than it is to travel higher. If you're watching this on YouTube, please give it a like, maybe a retweet or a comment. I read them all. The Biotech's worst group there is. We've been all over that in terms of, I was thinking maybe it could bounce in here as it undercuts that low, but again, zero evidence. No reason to get involved. If anything, you should be shorting as it rolls back over again after each of these little rally attempts. The biotechs are garbage. Stay away. I wouldn't be surprised to see them come down and test the lows from last year down at about 62.5, 63. The other markets, let's take a look here at XLF, the financial stocks. Again, I was looking at these saying maybe they have a chance to get going, but they completely caved in right down to this level we identified, which was that prior resistance and the location of the year-to-date anchored VWAP. I don't think it's likely that it'll hold. I think instead, if it holds short term, people will get excited and say, hey, look at it bouncing. And then if it makes a lower high, I want to get short over here for an eventual break. The more times any level of support is tested, the more likely it is that its supply will overwhelm the demand and prices will sink lower. Energy names giving up some ground too. No reason to be an owner in these all week with their making new purchases, at least not with this very clear pattern of lower highs and lower lows.